Bitcoin is trying to break below its most important support zone. Will the bears be successful and crash Bitcoin much lower? Or is this just a fake out and we are about to have a huge bump? Let's analyze. Hello ladies and gentlemen of the Paradise Club, this is Simon from Crypto Paradise. Welcome back, it's great to have you here, and Bitcoin is trying to break below our support zone. As you know, we are right now creating the secondary wave that I have been sharing with you in the previous video. With ParadiseFamilyVIPs, we have been taking advantage of this crash, we have been preparing ourselves for this crash, and we have just taken secondary target right here at around $114,000, ladies and gentlemen. But the important thing is where this secondary wave is going to finish, and that's exactly what we will be talking about in this video. We will go through weekly, we will go through daily, 4 hour, 1 hour, and then we will take a look at the minor subwaves on 15 minutes time frame. Ladies and gentlemen, let's start with 1 weekly time frame. We have just closed the weekly candle, ladies and gentlemen, and the weekly candle closed as a shooting candlestick pattern. It's the second one on the attempt of breaking above the $121,000, ladies and gentlemen. The previous one, the first one, happened on 14th of July. Alright, what does it mean, ladies and gentlemen? Right now we have a double top formation created by 2 shooting candlestick patterns. Ladies and gentlemen, as you know from our website mycryptoparadise.com, if you're a real paradiser, you're educating yourself in our MCP free university, and you know exactly what this means. Is it bullish or bearish? Well, it is not bullish at all, right? Usually you see these double top formations at the top of the trends, ladies and gentlemen, and together with that, if it's created by shooting candlestick pattern or aka gravestone doji, and you have a double top formation, it's kinda bearish, and it increases the bearish probabilities that we might have a reversal. So from the weekly time frame perspective, this needs to add to the points for bears, ladies and gentlemen. Okay, so double top formation, but as a professional traders, before taking some trading positions, we need to wait for confirmations. So does it mean that only based on this information entering right now some crazy short position? Not at all, right? From the ultra high time frame perspective, I'm talking about weekly, we have bearish signs. This one is not the only one, because if we take a look at the price section, we have created a higher high, but on the MACD histogram we have created a lower high. This is a classic bearish divergence, ladies and gentlemen. When the price action is creating higher high but the indicator is creating lower high, it basically suggests that the momentum of the bulls on the second high is very, very small and the bulls are getting exhausted. What does it mean? It means that the bears have a free ride to take over, alright? They have a big opportunity to take over, so this add up to the points for bears as well. But we are waiting for confirmations, right? So one of the confirmation of this bearish divergence is a bearish cross, something similar what we have had right here during January. Can you see? We have got the bearish cross, and after that was a confirmation together with this bearish candlestick pattern, which is the same one, right? Have a look at that, ladies and gentlemen. Let me zoom into that so you can clearly see that this was also a shooting candlestick pattern, which we have right now for 2 times, ladies and gentlemen. We have also created a double top at $121,000. So obviously these signs are not bullish, they are bearish, right? But as a professional traders from the weekly time frame, we need to wait for more confirmations, and what I'm waiting for is basically to reclaim this ascendant trend line. As you know, right now we are trading inside of this channel, which basically is holding our B wave intact. So basically we have created the A wave, now we are creating the B wave that goes beyond the start of the A wave. Basically this is going to be an expanded flat formation, and once we have a confirmation that this B wave is finished, we are about to start a C wave that will take us towards $44,000. But before that happens, we need to conclude the B wave, and there is some probability if we will be able to hold above the channel, if this weekly candle will not be able to reclaim this channel, channel, and you already know, for a successful reclaim, for you to create the highest probability trading position on the weekly time frame, what you need to wait for? Well, first of all, you need to have the breakout with a high volume. Right now it's Tuesday and the volume is still like, it can pick up on volume, right? The volume can pick up on volume basically, but right now it's very small, very small. We still have like almost the whole week ahead of us, but right now the breakout is with small volume, so that suggests some possible fake out, all right? But if we will have the breakout, the weekly candle will close below this ascending trend line, and this volume will be at least bigger than the previous one by the end of the week, okay? And this will suggest basically that this is kind of suggesting that we might be concluding the B wave already, right? But for confirmations for taking a position, I want to also wait for the breakout and then the proper retest, right? Retesting this support, as you can see right here, it's acting as a support. Right here, it's acting as a support. I want to see a retest of this support, and I want to see how it's reacting as a resistance, all right? So this is what I'm waiting for, ladies and gentlemen, on the weekly time frame, for me to be able to say with the highest probability, almost a certainty, that we are going down and we are starting the C wave that will first of all take us towards $88,000, all right? But from the Elliott wave perspective, right now, if we zoom in, ladies and gentlemen, into our price action on one daily time frame, it doesn't really suggest that the C wave of the B wave is finished. As you know, we are trading inside of the zigzag, right? From the Elliott wave perspective, one of the guideline is that the A wave is usually the same length as the C wave, all right? So this is the A wave, B wave, and right now we are in the C wave. If we measure the A wave, ladies and gentlemen, place it to the bottom of the B wave, you can see that it suggests that the C wave should finish at around $135,000. That means if I will see that we are concluding some kind of corrective mode pattern during the C wave, I will definitely be looking for some bullish opportunities. What I mean by that, let's have a look, ladies and gentlemen. I want to share with you what's going on the daily time frame with much more depth, because I want to explain to you the smaller time frame price action development. So first of all, we are right now trading inside of the channel. We are doing ABC zigzag, right? As you know from our My Crypto Paradise website, the ABC is basically subdividing itself into three smaller waves, ABC, and the A and C are emotive mode waves. That's how you can actually understand when they're gonna be finished, after the 5 moves to the upside are gonna be done, right? So if we take a look at the C wave, ladies and gentlemen, at this C wave, let me shift back to the chart, we can actually understand that with the highest probability, it's not yet finished, all right? Because this was our A wave that got a beautiful 5 moves. One of them was extended, as you already know. The B wave was finished also beautifully, and right now we are in the C wave. The C wave, as I've already showed you, is a motive mode wave. That means it's subdividing itself 5 smaller waves, which with the highest probability will finish at $135,000. As you know from the previous videos, the $135,000 is extremely important, you know, not only from the ultra high time frame perspective, it's a Fibonacci retracement level, but also on the medium time frame, we are having this Fibonacci spiral right there, all right, which should be the next target of the next higher degree motive mode wave. So this one was the previous motive mode wave, and the next one should finish right here at the next spiral barrier. We will be talking about that in a minute. You already know about this in the previous videos, but I will be reminded that to you. So right now, let's understand in which wave are we actually trading. So you understand that we have been creating the first wave, right? The first wave being concluded right here, then a secondary wave. After we have created these 2 waves, we have been able to say where the third wave is going to finish. And how? How did we know that? Because we have basically connected these 2 points. That's how we have got the slope of the trend line. And we have just copied the slope of the trend line, placed it to the top of the first wave, which wasn't right here. It was right here because we understand understand how the secondary corrective mode wave been actually forming, and it was in a flat pattern, right? ABC, so it finished right here, and then we have extended that line, and that gave us the target for the third wave, right? Afterwards, we have been waiting for confirmations. You know that we have got this beautiful shooting star candlestick pattern confirmed, all right? This is the important word, confirmed by a bearish engulfing candlestick pattern, and that told us with the highest probability that after consolidation is over, the resolution will be with the highest probability to the downside. And it happened, right? The fourth wave afterwards finished by our contracting triangle formation. You know that the contracting triangle is subdividing itself into 5 smaller waves, A, B, C, D, E. The E finished right here. Well, and after that, we have started the next impulse, and we have concluded this is the first wave, and right now we are creating the secondary wave. So basically, in my opinion, we have created the fourth wave already, and right now we are in the final fifth motive mode wave. All right, so what I mean by that is fifth wave, which is a motive mode wave. So I do believe that we have created this one as well, and right now we are in this wave. This wave is subdividing itself into 5 smaller waves as well. So I do believe that we have created the first wave. Second wave is right now finishing, and the important question is where it's gonna finish. Obviously, if we will be going below the start of the first wave, all of this will be invalidated, and the count was actually the way that only this motive mode wave created the final fifth wave, right? But that's why we are waiting for confirmations as a professional traders, so we are not getting trapped in some wrong counting of the Elliott wave. So you know that at $135,000 is loads of liquidity, loads of our indicators and technical analysis suggest that we should be touching $135,000 before the real reversal to the downside. But right now we need to be aware that there are bearish signs also on the daily time frame. So one of them is this bearish divergence on the MACD histogram. As you can see, the previous high, we have been creating a higher high on the price section, but on the MACD indicator, we have been creating a lower high. This is the similar bearish divergence of what we have observed on the ultra high time frame, right? And right now, it's also confirmed, ladies and gentlemen, we have got a bearish cross right here, all right? If you take a look at the RSI, we are trying to have a bearish reclaim, not confirmed yet, and the stochastic RSI has 2 open legs. So definitely on the daily time frame, if I will see that we are not able to sustain the daily above the ascending trend line, above all of these supports that I have been updating you in the previous video, and if the next daily candle will close below this support, below the 0.786 Fibonacci retracement level, I will not be looking at long positions anymore, okay, on the daily time frame. Definitely, I will be waiting after we are completely back, and then we have a retest. I will be positioning right here. If we will close the daily candle, which is closing in 7 hours 31 minutes, below all of these supports, the ascending trend line, this Fibonacci sequence zone, the moving average trend line, the orange one, as you can see right here, and below the VPV, the volume profile at around $118,000. If we will be closing a daily candle below all of this, I will definitely be very careful about watching for some long positions, okay? If we will close the daily candle and then we will also have a bearish retest, that means on a low volume, we will go to the upside and we will retest this as a resistance and have some impulsive reaction out of it. I will definitely be looking for short positions, and you know, the next major support zone that I would be looking for is at 1.618 Fibonacci retracement level right here at around $109,000, ladies and gentlemen. So if we will have the bearish reclaim of this ascending channel, ladies and gentlemen, I will be definitely with Paradise Family VIPs looking at some beautiful high time frame short positions. That means on a swing trading perspective, where we would be able to place our stop loss quite tight to our entry price, and then our targets could be as far away as possible possible. So you know that from the professional trading perspective, if you want to be long-term profitable, this is absolutely mandatory. Not only waiting for the highest probability trade setups, but also to have the one of the beautifulest risk to reward ratio possible. Let's take a look right now what's going on 4-hour time frame, which is kinda wild. So basically we are trying to close below this contracting triangle, ladies and gentlemen, during the continuation of our bearish price action. If that's gonna happen, it's gonna be bad, right? Right now we are trying to destroy the liquidity. As you can see right here, if I refresh it, let me refresh it in a minute, it's going to be there and it will show us that we are absolutely destroying the liquidity that was right here. All right, so loads of stop losses and liquidation levels of over leverage long positions being destroyed right here and being destroyed also earlier today in the morning. All right, so right now if we take a look what's below us, it's kinda something but not as significant as what we have already liquidated. So there is not really too much money to be made out of crashing even harder, considering that if we take a look at the order book, ladies and gentlemen, on the Binance Spot exchange, which is the highest volume exchange, so we are watching the order book there, we can see that right now at $113,600 we have a $34 million buy wall. All right, and all of that down to $110,000. You can see that the order book is kinda thick, it's very big. All right, comparing it with what we have above us, you can see it's pretty thin. So for the bears to keep on crashing just for the little liquidity that we have below us, it's not really profitable to go through all of these buy walls, right? So that's why I do believe that right now, also by looking at the liquidation, and basically we are streaming this for you live, right? This chart, so you can watch for this liquidation yourselves. So if we have some big liquidation event and we have liquidated loads of long positions, over leveraged long positions, loads of them right now, you know that that's usually a point of reversal, right? Once you see loads of liquidation of positions, once you see the order book is starting to get thick compared to what's at the upside, if you also take a look at the liquidation levels, if there is nothing significant, you can pretty much assume, well, for the market makers, for the Bitcoin whales, it's not really that profitable to keep on crashing the Bitcoin, which is suggesting that right now it's actually not a bad idea to start looking for a potential fake out. So maybe this break below the contracting triangle is fake out just to liquidate the overleveraged long positions. Maybe this is the final crash of the secondary wave. So how can we know where the secondary wave is gonna be finished? Well, because we understand the Elliott wave theory, we understand how to calculate the subwaves, because we know how is each section subdividing itself, right? So if we take a look at our cheat sheet on our website mycryptoparadise.com, we can understand that the secondary wave with the highest probability of an impulse is a zigzag, right? So we understand that the C of the zigzag is a motive mode wave. That means it subdivides itself into 5 smaller waves. If it's an uptrend or a downtrend, it doesn't matter. So let's right now take a look how we are subdividing itself. Once we have 5 moves finished, we will know that catching the falling knife is not a bad idea after few confirmations, right? Together with that, on the 4-hour time frame, we are right now having a bullish divergence. Let's have a look on the price action. As you can see right here on the price chart, we are creating lower low, but the MACD histogram is creating a higher low. Right now, we are just waiting for a cross, okay? And you can see once we get across, it will be a confirmation, something similar what happened in August, that we can resume our uptrend, all right? So right now we are having a bullish divergence. You can see that the momentum of bears is decreasing. This is a beautiful example of our classic bullish divergence. The price action is creating lower low, but the indicator is creating higher low. It basically suggests even though the price is going down, the momentum of the bears is decreasing, and that's a great opportunity for the bulls to start taking over, right? But we need to have the cross. So with the Paradise team, we are waiting for the cross, ladies and gentlemen. Once we get it, we will be aggressively longing, because we will know that the secondary wave is going to be finished, because we also understand that the ABC is already finished or near it's finished, the zigzag. Let me talk about it in a minute, but first of all I want to share with you that on the RSI indicator, on this price action right here, on the smaller one, we are also creating a bullish divergence. Stochastic RSI is kinda bearish still, but the RSI and the MACD the histogram is kinda nice. We just need to wait for the confirmations, ladies and gentlemen. So right now, what is the probability that the secondary wave is finished right here? The drop below this descending triangle is just a fake out, and we can start pumping to the upside towards $135,000. Well, let me show you the subwaves, ladies and gentlemen. So on the low time frame chart, you understand that the fourth wave was finished right here at around $112,000. Afterwards, we have started the first wave of our impulse. What I'm talking about is basically, you know that right now we are in the final fifth wave, right? That needs to subdivide itself into 5 smaller waves. So I'm talking about this one. So we have started, this is the motive mode wave basically, which is subdividing itself into 5 smaller waves. So 1, 2, 3, 4, and you know that we have had the extended fifth wave, and we concluded that exactly below our resistance at around $125,000. After that, we have started the corrective mode wave, the second one. I'm talking about this one right here, which is a corrective mode wave. It's a reactionary wave to the main trend. That means it's subdividing itself into one of this pattern, all right? And we know, because we understand the Elliott wave theory perfectly, that with the highest probability, almost always the secondary wave is a deep correction, all right? And it's a zigzag or double zigzag, all right? So let's take a look how we have been subdividing the waves right now. If you take a look on the 1 hour time frame, as you remember from the previous videos, I have been sharing with you that right here we have concluded the 5 moves to the downside, and we have created the A wave, right? On the 15 minutes time frame, it's much better visible. 1, 2, 3, 4, and then extended fifth, right? We have finished that right here, which was previously a support zone. After that, we have started the B wave, which basically created a flat formation. I've told you it might be a contracting where the C wave will not go beyond the end of the A wave, and that's exactly what happened. A, B, C, and then we have started the final C wave, right? So this was the A wave of a zigzag B wave, and right now we are in the C wave. So the C wave, as you remember, is also subdividing itself into 5 smaller waves. 1, 2, 3, 4, 5, because it's a motive mode wave, right? So let me show you the subwaves right now. Let's calculate the subwaves together. So we have created first wave right here, secondary wave, third wave, then a fourth wave, corrective mode wave, ladies and gentlemen. This was kinda sideways correction. So from the guideline of alternation, this needs to be, the fourth wave needs to be a deep correction, which happened. It got expanded flat pattern where this was the A wave, B wave, and C wave, finished at our previous support. Now it acted as a resistance, and then we started the final fifth wave. We are right now in the final fifth wave. You know that it's subdividing itself into 5 smaller waves as well. So once we are able to determine that the 5 moves are done, we will be able to understand, all right, the whole corrective mode wave is finished, and we can start going to the upside. So let's calculate the subwaves, ladies and gentlemen. This was the first wave, secondary wave right here, third wave, fourth wave, and ABC flat pattern touching perfectly the first wave. Well, and right now we are in the final fifth wave. If we take a look at the channeling, ladies and gentlemen, so we basically need to connect the secondary wave with the end of the fourth wave, so we get the slope, right? Once we copy the slope, we place it to the top of the first wave, and we can see that right now we are getting near to our target where the fifth wave should finish, okay? If we take a look at the previous channel, we can see that there was a little bit of deviation. That means the fifth wave can go a little bit below as well. But right now, the important thing is that we are, and you can see that it perfectly worked already. Right now, we are hopefully creating a double bottom formation. You can see that this descending channel is working nicely. We are in the huge liquidity demand zone, ladies and gentlemen. Also, because you know that I've been telling you on the ultra high time frame chart that the A wave usually needs to be the same length as the C wave, right? Well, you need to understand also the context of the market, because if we would get it, the fourth wave finished right here, we would need to drop to around $111,000. But you already know from the market perspective, this is not really profitable for the whales, right? So the next point where the C wave is usually finishing, all right, is a 0.618 Fibonacci sequence extension of the first wave, so 61.8%. So I've basically connected the 2 points from our Fibonacci retracement tool. I've calculated 61.8% measurement of the A wave, and I've placed it to the top of the B wave, all right, and it got me here the 0.618 Fibonacci level, and the second one as well, the next important one, 786. So basically it got me this zone, ladies and gentlemen, and with the highest probability, if our Elliott wave count is correct, and this is just the secondary wave, this was the first wave, this is the secondary wave, we should not go below this support zone, all right? So as you know, if we will start crashing below the support zone, it will be bearish. I will be looking for some confirmations and we will be shorting aggressively, right? Right now, I'm not a bear. I'm looking for a bullish opportunities because of the macro perspective and the overall context in the market that I have been sharing with you in this whole video. I'm looking for bullish opportunities. So once we get confirmations that indeed this fifth wave was finished, I will be looking for long in Bitcoin and we will be riding it to the upside, ladies and gentlemen, right? So right now, there might be lots of tactics that you might be using. Either you are waiting for the finishment of the fifth wave, that might be some portfolio exposure, or you are then waiting for a first showcase that we are creating a new impulse to the upside. So I usually like to position on the secondary wave if it's gonna be on a low volume. There are also gonna be some bullish divergence. It will be a high probability trade. I will be able to place our invalidation level very close to our entry price, and you know that we are targeting major target $135,000. And with the highest probability, if this secondary wave is concluded, ladies and gentlemen, the price action is going to look like this. If this secondary wave was finished right here, which is a high probability right now, points to bulls definitely for the Elliott wave count on lower time frame, ladies and gentlemen. Once we get enough confirmations, we, with the highest probability, will be riding the third wave towards $129,000, ladies and gentlemen. So the price action development will look something like this. 1, 2, if this is confirmed, we are riding towards $129,000. Then we will have a fourth wave right here finished, and then the fifth wave will finish at $135,000. So ladies and gentlemen, be very careful how right now we will be consolidating and creating and finishing the fifth wave. Wait for some confirmations, either the fifth wave finishment or a new impulse creation, and position yourself on the secondary wave. We are watching and monitoring the market 24/7 with the Paradise team, and with Paradise Family VIPs, we are ready to start trading aggressively on swing trading perspective, either the long side, which we are looking for right now, or the bear side once we get a bearish confirmations. Thank you so much for watching. Smash the like button if you have enjoyed this video, and I will see you again in the next video. As you know, I'm recording for you every Tuesday, Thursday and Saturday, so I will see you again on Thursday. Cheers.